Hey everybody, welcome back to another Cryptocurrency Chat podcast, episode number 433. Everyone's in Vegas except for me, but that's my own fault. So, let's get into what's going on with everybody there right now. John, Mike?
What's up, man? Yeah, right here. The weather's great. Vacation's well. It's been relaxing. Can't complain. Food's been great. Mike's been a good host, showing us around. Thank you, Mike. By the way, he's been here a time or two, and so it's been a good experience. It's my first time out here.
Mike, how you doing?
Pretty good. Excited for this episode of Crypto News. Get to talk about Coinbase and JP Morgan.
No, we have a couple of interesting articles to get to. Let me just hit the normal intro stuff we normally do here. If everybody is appreciative of this podcast, as we hope you are, you can donate to us in various forms of coin: Bitcoin, Ethereum, BNB, Raven, BAT, Litecoin, Flux, etc., Monero included. You can also check us out on Discord, YouTube, Twitter, Twitch, and our favorite ATOZY, which is just like YouTube but for free and based on coin. If you appreciate our content, you can also check out, that's not the right time, but C3 Media t-shirts. We have there we go. Diamond Hands black, Diamond Hands white t-shirts, as well as Stack Sats and HODL. This is the we say at the end of every single episode. Let's get on to the quick reading of the certain job of the day from the company called The Graph. You'll be a subgraph developer. The Graph is an indexing protocol for querying networks like Ethereum and IPFS. One can build and publish open APIs called subgraphs, making data easily accessible. Web3 is a new stack for a radically better internet. All data is stored and processed on open networks with verifiable integrity. The Graph makes querying the data fast, reliable, and secure. By combining Web3 protocols, developers can build dApps with powerful new features for solving the world's challenges. You will be doing things such as developing, testing, deploying, publishing, and maintaining high-quality subgraphs, deciding what data will be indexed in the blockchain and how it will be stored and made available via the API layer, as well as advocating for the graph. Pardon, not the graph, the graph. Just graph. Anyways, that's a subgraph developer for the Graph. The quote of the day comes from Mike, who recommended that we check out a fellow named Dylan Lachair. Dylan's quote is, "There's a reason Satoshi Nakamoto decided to remain anonymous." There's definitely a reason for it. And if you want to know more about that, you can check out Dylan Lachair on Twitter. Lachair_. Now on to the news.
Yeah.
Get some juicy news from Bitboy. The first one off here, let me just get over to that stuff. And I'll see what's going on here. And John, tell us about Bitboy.
Alright, so give me a second here. Okay, Bitboy. This one's written, provided by Decrypt.co. Written by Ryan Ozawa. Well, that's a new name. Ozawa. Bitboy versus, was it ATOZY? ATOZY. YouTuber sues YouTuber for defamation, emotional distress. Emotional damage. One of the biggest crypto commentators on YouTube has filed a lawsuit against a fellow YouTuber for defamation and damaging statements, seeking to recover damages. Ben Armstrong, who brands himself as Bitboy Crypto, says Erling Menschlong, what is that? Menschlong Jr., aka ATOZY.
It's Menschwell, not Menschlong.
All right. ATOZY posted a video on YouTube entitled, I'm about to get sued now, right? The lawsuit claims a laundry list of offenses in that video, including defamation, infliction of emotional distress, torturous interference with business relations or potential business relations, violation of the Uniform Deceptive Practice Act, and violation of the Fair Business Practices Act. The filing says, what was the last name?
Menschwell.
Menschwell?
That's what it looks like to me. Menschwell. Menschwell.
Repeatedly called Armstrong a dirtbag, stating that he is a shady dirtbag and a dirtbag YouTuber. Armstrong has 1.44 million subscribers. Wow, I wish we had that. And has netted 212 million views since launching his channel in February 2018. Menschwell has 1.23 million subscribers with 223 million views since March 2012. The complaint and jury demand was filed in the U.S. District Court for the Northern District of Georgia in Atlanta yesterday, deemed by Armstrong's legal counsel to be the appropriate venue, as Armstrong lives in Ackworth, Georgia, while Menschwal lives in Sterling, Virginia. It is a federal suit because it involves impact of losses in excess of $75,000. Yeah. What do you got? What's you guys' comments on this? Come on, Mike. I know you know about this stuff. What's going on here? This is Bitboy. He's been around the block, right? He's not a square guy. He's in the early days. We were talking about that earlier, and yeah, in the early days, this guy was pretty much chilling a bunch of scam coins, to promote his YouTube, man. So is the other guy, was it Menschlong? Is he wrong? Crickets? Am I by myself on this one?
I'm pretty sure he's not wrong. I've seen Bitboy shill a lot of things and get paid a lot on the back end that he doesn't really make known. But I think it's one of those times.
It's not very transparent.
So I'm going to continue on real quick. Let's see, there's a little bit more here. Let's see. So down at the bottom it says Armstrong's business model relies on his reputation and his status as an influencer, i.e. a well-known online personality who influences others' decisions, such as to buy or sell cryptocurrency as investment. The complaint reads, introducing as fact that he is an industry-leading source of reliable commentary with respect to investments in cryptocurrency. Furthermore, the lawsuit asks, quote, can there be more damaging assertion for someone like Bitboy Crypto, who engages in the business of providing advice and commentary on cryptocurrency investments? But on Armstrong's YouTube channel, he says his content is, quote, for general information purposes only, and cautions, please be advised that I am not a professional advisor in business areas involving finance, cryptocurrency, taxation, security, and commodity trading, or the practice of law. Nothing written or discussed is intended to be construed or relied upon as investment, financial, legal, regulatory, accounting, tax, or similar advice. Nor should it be. Actually, Jake, you keep saying that. We shouldn't say that, right? We shouldn't say that.
Unless someone's directly paying you for the advice, then it's not considered financial advice. So you can say whatever you want, and the general assumption is that you're just saying it because you want to talk about it, not because you're giving people explicit financial advice. Now, if Bitboy has people paying him directly for advice that he's giving on his channel, those people can sue him. No one else can.
I see. Okay. Cool. We'll leave that one there. We'll see what happens. I'm sure that there's going to be updates in the future. So that's it for now. Moving on.
All right, moving on to Ethereum merge.
The next article is from DeSalvo, and it's Ethereum merge will be good for Coinbase, says JP Morgan. The investment bank said today that Coinbase could experience a big revenue opportunity from its Ethereum staking service. Cryptocurrency exchange Coinbase could benefit from Ethereum's long-awaited merge, according to investment bank JP Morgan. In a Wednesday note to investors, analyst Kenneth Worthington said the San Francisco-based exchange's Ethereum holdings and its staking services for institutions will help it financially. Coinbase figures haven't been great during the bear market. Earlier this month, it posted a $1.1 billion in net losses over the past financial quarter, as trading volume on the exchange fell by 29%. Wow, that is quite the ball to drop.
Yeah,
I can't believe they're doing that bad, especially since they're pretty much the best exchange to go to in the United States if you want to buy large amounts of Bitcoin. Anyways,
Yep.
But Ethereum's move to ETH 2.0 could help the community. The New York-based investment bank said, "We see Coinbase as a meaningful beneficiary of the Ethereum merge." The JP Morgan note read, "Coinbase is bigger in Ethereum than it was intuitive to us, thus leading directly into a bigger revenue opportunity." It added, We believe that Coinbase has taken a series of steps to maximize the Ethereum staking revenue opportunity. Ethereum, the second biggest cryptocurrency by market cap, is changing the way it does things next month in an update called the Merge, which will move the blockchain to a proof-of-stake consensus mechanism. This is kind of on point with what Coinbase is doing. Coinbase has always been known to have a really good relationship with the government and big banks, so this really shouldn't be blindsiding anyone. The article continues. Right now, Ethereum uses proof of work consensus mechanism as the same one as Bitcoin. With this system, miners attempt to solve complex math equations with an energy-intensive process, also all to generate new blocks and earn rewards in cryptocurrency. But Ethereum's move to proof of stake will eliminate the need for miners. Instead, validators would take their place and keep the network secure by locking up the network's native crypto, something which can be done on exchanges like Coinbase. It also is worth noting that if you stake your Ethereum, you cannot unstake your Ethereum, and the code to unstake your Ethereum has not been written yet.
Yep. You're stuck.
Bum, bum, bum. There is your 2 Satoshis of the day. So do not forget that.
Yeah. And I'm pretty sure JP Morgan has a pretty good interest in Coinbase financially, along with a lot of the big Ethereum companies like Consensus and MetaMask that's underneath it, and Infura. So they don't really make it well known, but they have substantial weight in those companies.
Mm-hmm. Correct.
Yep. Be careful where you put your money. You keep it in your own wallet.
I think when we first, way back on my first or second episode, I said friends don't let friends use Coinbase, and that was before their public IPO. But I still stand by that. Unless you got friends who want to buy many millions of dollars worth of Bitcoin, there's so many other options out there for the average person that aren't gonna screw you up as hard as Coinbase will.
They're not nearly as expensive either. If you're going to use FTX, it's still going to be cheaper than Coinbase.
Yeah, and Coinbase customer service has always been just so terrible. Gemini's pretty good.
So just to reiterate, what you're saying is just stay away from Coinbase. Period. I mean, even if you're buying it, you're trying to on-ramp people on it. What's the alternative out there? For me, it's been Binance.us, even though they don't have all the good cryptos out there. But it works for me. I've been using Binance for a while. No issues.
Yeah. Another thing would be.
I mean, stay.
Go ahead. Sorry.
I say stay away from Coinbase, but always keep an eye on it because they are a big market mover, and it's good to be kept in the loop, even if you're a small fish, on what the big fish are doing.
Yeah. Oh yeah. Keep an eye out for all the big guys.
But you
might
can't,
run
you can't really
run you over if you're not careful.
I guess you could complain with the free crypto that they give you. You know what's crazy is that how does somebody end up in a negative when you're getting free crypto, right? You know how you do those little questionnaires and you got like $3 of this crypto, this new breaking crypto that Coinbase is adopting. It's like, cool. It's like, well, how am I down 95% Coinbase? What the heck?
They just take it back from you from the trade.
Yeah. And that coin's value tanks.
That has happened many times. So, all right.
It is interesting.
Go ahead. Sorry.
No, just real quick, I was going to say it is interesting that this article does make mentions of how Bitcoin is criticized for not being green, and proof of work is going to be green as far as energy goes. But there's a lot more that goes into it. Yeah, there's a lot more that goes into it on the advantages of proof of work. And I'm really excited about the ETH merge because it's going to take things that are theoretical and show what the actual facts are. Yeah, we should move on to the next article.
Yeah. So from also Decrypt, Stacey Elliott writes, Dutch officials say Tornado Cash's code could be criminal. Dutch officials told the non-profit DeFi education fund that it may be punishable if a developer writes code for the sole purpose of committing a criminal act. I really agree with that statement, ironically. It's the latest detail from the Fiscal Information and Investigation Service, or FIOD, which last week arrested a 29-year-old developer in Amsterdam in connection with Tornado Cash. The block reported that the identity of the person arrested, Alex Pertsev, a Tornado Cash developer. About the concerns, the development of a tool is not prohibited, but if a tool has been created for the sole purpose of committing criminal acts, for example, to conceal criminal flow of money, putting online, making available a developed tool may be punishable. FID wrote in a response to questions from DeFi Education Fund. The nonprofit has been communicating with FID since last week and sharing responses on Twitter. Here are some examples of DeFi Education Fund's responses on Twitter. The Cash app was created to obscure Ethereum transactions. It's been used by traders who want to maintain their privacy, but also drawn to scrutiny from government officials. On August 8th, U.S. Office of Financial Asset Controller.
See, that's what I don't understand, man. I'm sorry to interrupt. I don't understand this. Please, somebody. I don't have any hair. Somebody, please pull their hair out for me, because I don't understand this. Like, seriously, this boggles my mind. You know, you're a criminal because you're writing code, but like we talked about this, Jake, before, is that you're writing code that can be used for good or for bad. It's like whatever. It's what's the word? It's neutral. Like a road, right? Like, for example, a highway. Criminals can use it to traffic drugs and weapons across that highway, or an ambulance can drive to that highway, right? Same thing with Tornado Cash. It's just to obscure transactions. I want my transactions to be private. I don't want everybody knowing what I'm doing on the internet. You know, there's no need for that. And as a matter of fact, I was talking about how to privatize my data on IPFS, just because it's so invasive. Even though I don't really have much stuff out there, but for example, when I publish my book is out on the blockchain, but everybody can see my book because it's on IPFS, and some troll out there copied it and minted like an infinite amount of my issues of my book. And now I'm kind of like, geez, that was like 10 years of my life putting into that book, all gone just because I can't really put my my book encrypted in the proper way. So that's what I was talking to Michael about.
On the plus side, imitation is a sincerest form of flattery. So,
over your microphone easily.
Yeah, sorry about that, Jake, for going on a side tangent there.
It's fine. If Mike was trying to talk, I couldn't hear him because I had to mute him, just in echo.
on the flip side, imitation is the sincerest form of flattery.
No. Tornado Cash was routinely used for legitimate purposes. Max Bernstein, the DeFi Education Fund's communication lead, told Decrypt in an email. We're still waiting for the specific charges against the developer to be released. The following must remain clear. Writing and publishing code must be protected in free societies, and privacy is not a crime. Probably the key of the entire article, or the entire thing that's going on here. Since the arrest last week, the governance forum and Discord server connected to Tornado Cash have been shut down. A representative for the project also told Decrypt that the project's code has been removed from GitHub, but it doesn't change anything for Tornado Cash contracts. Tuesday, Kraken CEO Jesse Powell joined a growing chorus of industry leaders to speak out against the sanctions. He told Bloomberg the U.S. ban on the app is unconstitutional.
I agree.
And that is the end of the article, but really this is the point.
I agree, just because what we're talking about earlier, it's like, you know, it's like one of those things. Am I a war criminal because I want to pave a roadway to help people be just transfer from point A to point B better, you know? Or if I want to, you know.
Well, yeah, you are a criminal if the government deems you a criminal and if the government sends law enforcement after you.
That's stupid, because this is like one of those things, like, it's not my fault that criminals want to use my software. You know, why is it? Why it's a neutral thing. All this person's doing is just obscuring transactions. That's all it is. That's not a crime.
Or you know, whether it's an oversized body pillow or a gigantic black dildo. The fact of the matter is, it's my personal life. I get to do what I want in my personal life. The problem with the government is it keeps wanting to, in my opinion, so we can do our wallets to see if we're funding crime or funding terrorism. And I get the reason they want to do that, but the reason that the example I keep thinking of is what Apple did with their iPhones, and that was they're like, look, we can't even break encryption on our own devices because we're trying to not be unfair to our users. If we can just get into the back door of all their data, that's kind of unfair to them. So we're trying to encrypt end to end, and we have no way of cracking it. It's their phone only, not us. This is a fight against jerks and people who think they're protecting society when they're just being jerks, in my opinion. Anyways, let's move on to another article before this runs off the rails. John, can you tell us about the Canadian Pension Fund?
Yeah. Here we go. So moving on to the next one. This one's once again from Decrypt.co, written by Stacey Elliott. Canadian Pension Fund takes $150 million hit from Celsius investment. CDPQ, one of Canada's largest pension managers, has written off its $150 million investment in bankrupt crypto lender Celsius Network. Quote, "We knew there were challenges in regards to crypto assets, but perhaps we underestimated those challenges." Charles Edmond, CEO of, was it Casey de Depot et Placement de Quebec, something like that.
CDPQ, because it's going to be a French word that we're going to pronounce.
Yeah, CDPQ reported a $26 billion loss for the first half of the year, which amounts to a return of negative 7.9%, according to a press release from the firm. When CDPQ announced that it had added Celsius Network to its portfolio in October 2021, in the middle of the crypto market's run to the nearly $3 trillion cap, Alexandre Skynet, the pension manager's chief technology officer, said in a release that it was the leading crypto lender. Celsius had recently announced that it had $25 billion assets under management and more than 1 million customers on its platform, but it was already facing scrutiny from regulators after receiving cease and desist letters from authorities in Kentucky, Texas, and New Jersey. After Celsius Network CEO Alex Mashinsky repeatedly assured customers that their funds were safe, the company froze accounts on June 12th. It kept accounts frozen for 4 weeks while repaying $1 billion in outstanding loans from decentralized finance protocols Aave, Maker, and Compound. Then on July 13th, the company filed for Chapter 11 bankruptcy protection. Jeez, remember that? I was around back in those days. Details about how the company was run leading up to Chapter 11 bankruptcy filing have started to come to light. Yesterday, the Financial Times reported that multiple unnamed sources said Mashinsky told the Celsius Network investment team he would personally assume control of the company's trading in January. I don't know, man. It's getting scary. There was an email that just went out today, too. I don't know. Did you get that, Jake?
I have not checked the email today.
Yeah, there was an email.
I imagine that another one has been updating us with the BS. Yeah. If only we'd listened to Mike when he warned us.
Yes, Mike's stepped out. He's got to get ready.
Alrighty.
All right. So you'll take the next one.
Coinbase has a serious insider trading problem, study claims. The three researchers at University of Technology in Sydney, Australia, claim that insider trading is systemic in the cryptocurrency industry and estimate that such activity has taken place up to 25% of Coinbase listings in the last 4 years. Not yet peer-to-peer reviewed paper titled Insider Trading in Cryptocurrency Markets. Professor Esther Feliz-Venas, Professor Talis Putin's candidate Luke Johnson estimate that insider trading occurred on 10 to 25% of cryptocurrency listings on San Francisco-based exchange between September 2018 and May 2022. The researchers claim that the results of at least $1.5 million of ill-gotten profits. Our findings identify cases that are yet to be prosecuted, they wrote. further argue that the growing perception of insider trading in crypto may scare away potential investors and could impede the adoption of cryptographically secured ways of representing securities and other financial instruments, perception that is largely supported by their findings. In terms of methodology, the recent 146 Coinbase lists 300 hours before new listings went live on the exchange to look for abnormal patterns of said centralized exchanges, or DEXs, which do not require identity verification. For visual inspection, we note that there is an evident run-up pattern prior to the listing announcement, starting at about minus 250 hours before, researchers state. The run-up continues until the listing announcement event, where we see a jump in price because of new information entering the market and traders reacting to the news. The run-up pattern we observe is consistent with run-ups in prosecuted cases of insider trading in stock markets, they wrote. But opponents could argue that the paper applying findings of Coinbase to the entire crypto industry as a whole. A source familiar with trading practices at crypto exchange study jumps to the conclusion, providing clear evidence for identifying specific wallet addresses that allegedly font ran token listings. Anyways,
what did you think?
I'm going to go a whole very long article here.
Yeah, that's kind of a big red flag right there. It's like, hey, this coin has a run up on an average of 250 hours in advance every single time. That's kind of
I mean, 250 hours in advance. We're talking about 10 days, roughly, a little bit more than 10 days.
Yeah, it gives 10 days for it to get pumped up, and then it's pushed onto Coinbase. That's kind of
we already know that when a coin hits the market, it explodes, particularly when it hits Coinbase.
Yeah. Yeah. Well, that's
Shiba
for
Inu
sure.
did this exact thing.
But to have it front run in advance like that, 10 days in advance, that
means that someone knows it's going to happen, right?
So that's kind of like called insider trading, if I'm not mistaken. But
well, that's what they're saying, right? So yeah, yes.
All right.
So yeah, they're basically saying we watched 46 coins do this over a 4-year span, and it happens every single time. It means that what's going on is insider trading. So let's get to the last article. It sucks that Coinbase is doing this, but we already know they're being sued for insider trading.
Yeah. It won't surprise me if their teapot tilts. Okay, the next news is provided by CryptoPotato, written by Andrew Thorovalis. The merge will rally Ethereum like a Bitcoin halving. Arthur Hayes. In his latest blog post, former BitMEX CEO Arthur Hayes broke down how he expects Ethereum traders to react before and after the merge. Based on the technicals of the upgrade, he said it will rally after in September, similar to Bitcoin rallied halving cycles. In an article titled Flexive, centers bullish thesis around George Soros's theory of reflexivity. The theory posits that there is a feedback loop between posits that there is a feedback loop between the market prices and the expectations held by markets participants for a given market situation. I don't know what I just read. In the context of this merge, Haynes believes this phenomenon can rally Ethereum's price due to the reflexive relationship between its price and its deflationary properties. Quote, if the merge is successful, traders will buy ETH today, knowing that the higher the price goes, the more the network will be used and the more deflationary it will become, driving the price higher, causing the network to be used more, and so on and so forth, he explained. This is a virtuous cycle for bulls. The merge will usher two main changes for Ethereum. It will shift from a consensus mechanism from the proof of work to proof of stake, and also reduce ETH supply issuance rate by roughly 90%. This has led some to nickname the event the triple halvening. And let's see, combined with EIP 1559, which burns ETH out of circulation with every transaction, ETH is expected by many to become a net deflationary currency following the upgrade. Therefore, Haynes suspects that the feedback loop can form between ETH's price appreciation, usage, and deflationary issuance. Alternatively, the co-founder noted that the feedback loop could work against ETH, driving its price down in the event of an unsuccessful merge. However, a look at ETH's spot market activity, which has greatly outperformed Bitcoin in recent weeks, suggests that the market participants expects a successful merge event. All right. This is a super long. Actually, no, it's not a super. Why is it super long on my? Actually, let me just finish this off. Sorry about that. Ethereum derivatives data from Glassnode last week suggests that traders may be planning to sell the news once the merge actually takes place in mid-September. Everyone's going to sell the news. Everybody. All right. Specifically, in the term structure for Ethereum's future is trading in backwardation, leading all the way until June 2023. That means future traders expect ETH's price will drop by the maturity date of their contracts. However, there's another however. However, Haynes offered two alternatives theories for why ETH may be experiencing buy pressure in the spot market and sell pressure in the futures market. On one hand, traders could be hedging their long physical ETH bets in the futures market in case of unsuccessful merge. On the other, they could be hedging against their ETH position for general reasons while accumulating spot ETH simply to pick up free chain split tokens following a speculative POW fork. He expects that these traders will, quote, buy back their hedge following a successful merge, and that any people attempting to sell their spot ETH will be in the minority if there is indeed a sell-off at the time. Haynes only plans to increase rather than decrease his position. Quote,
8 minutes.
Okay. All right. I expect, here's the last quote, okay. I expect we will see it play out similarly to Bitcoin halving, he wrote. Quote, we all know that the dates will occur, and yet Bitcoin still always rallies post-halving. And that's that.
Yep, that be all the news for today. Interesting things. I feel like I'm a little bit more disappointed by the Bitboy article than I was by this one, actually. But there's a lot of stuff happening in the news, and I think a lot of people have a lot of expectation for the Ethereum merge, rather. Ethereum. Yes, it does feel kind of eerie at times.
Yeah.
So, thank you all for checking in, and hope that you all have a great rest of your day, and we'll see you on Sunday. So, as we always say at the end of our episode, Zach Sats and Huddle.
Adios.